Good morning and welcome to the weekly Golden Nugget every Wednesday, 11:30 Eastern Standard Time. Mark your calendar. Seriously, we've been taking some seriously awesome trades. Our win rate is absolutely astronomical. We went 2 for 2, 100% win rate this past week on silver as well. So with that being said, thank you so much for showing up every single week to all the people that do. And if you are here and you are new to the show, thank you for joining us on the legendary Verified Investing YouTube channel, the Drew Wolfer YouTube channel, the Verified Investing Twitter, the Drew Wolfer Twitter, wherever it is that you show up from and wherever it is that you show up from in the world. We appreciate you because we would not have a platform without you. So let's talk about what the Golden Nugget is, how we're going to structure this, and then we're just going to get right into it because we have a star-studded week. This is game time, and FOMC is today. Okay, so the Fed rate decision is about to come out in a few hours. So just please pay attention to the markets. Now, the first thing that we are going to do, obviously, we are going to do what is called gauging gold. And that is where we're going to do the technical analysis on gold, give you the trades that we gave out last week, see how they went, give you the trades for this week and all the key levels. Spoiler alert, there's going to be some pretty critical levels that are happening pretty much right now today. Secondarily, we will get into what is called the silver snapshot. We'll show you the trades that we gave out last week. We'll show you the trades that won, that were awesome trades last week on silver. And then we will give you the trades for this week and the key levels yet again. Then we will get into what is called the commodity compass, talking about everything that's going to be happening inside of the metals markets and just the broader financial markets that are going to be moving those markets, the key drivers, right? What happened last week, what's coming up this week. And then we will get into what is called the Golden Nugget segment, which is where I give you a golden nugget from every single week, right? From the Golden Opportunity, which is the training that I brought out in conjunction with Verified Investing, where I teach you exactly how I built my documented 86% win rate, right? As it sits right now. And you can go check this on the website anytime that you'd like to. We have the track record up and available for anybody with full transparency, wins and losses, right? And basically what we do is we give you a concept, kind of a spoiler alert of what you can expect to find inside of the Golden Opportunity training that will help you become a, trader inside of any financial market, not just gold. Even though it is gold focused, it will help you in any crypto, Forex, stocks, whatever, right? Then we will get into our two special segments where we talk about things that are happening in the world. And spoiler alert, you already know one of them is going to be the Fed meeting. And then we will get into the economic calendar. So let's not waste any time. Let's go over the levels. Let's go over the trades. Let's see what we've got. And let's go ahead and gauge gold. Okay, now, first and foremost, let's go over the trades that we gave out last week. We did not get any trades on gold last week. Why, Drew? Well, gold just kept running on us, and we didn't want to chase it. If you chased it, that's fine, perfectly fine. I totally get it. But our last gold trade was about, I think it was like a week and a half ago, where we took this massive win all the way from down here, all the way up to about 36.56, and then we just kind of capitulated, and then it just blasted off and ran on us, so there was nothing we could really do about it. So obviously, this short did not hit. This was a short from the ascending triangle's top. I'll show you the ascending triangle just really quickly. If you give me 1 second. So there is, we'll just show you the two. We'll just show you the two really quick. Let me scroll down 1 second. And we're going to go to the daily chart, show you the ascending triangle and the rising wedge. Okay. So let me zoom out just a little bit. So we had an ascending triangle right here. Okay. And we broke out from that. We just ran, just kept running. Okay, we never got our entry on that. And then we have the rising wedge, which we still have yet to come back and back test, but there's a nice little level that we could come back and back test. So for all intents and purposes, that's kind of what we saw. Then we also saw an inverted head and shoulders that broke out, right? But I will show you that on the hourly chart because that we got to zoom in for that. Okay, so let me go ahead and pull that up. 1 hour inverted head and shoulders, bang, 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 and then breakout, full take profit. We didn't get the back test of it, but we're trying to back test it right now. Even though this move's already been made, I would not put much weight on that inverted head and shoulders. Okay. Then we had a short that was right around here. And this obviously never happened because we were thinking that there was going to be a swing failure pattern at this high potentially. Obviously, we ran through that, no swing failure pattern, no trade. Then we had this short, which is if we break down below outside of this parallel. Obviously, we never came anywhere close to it. Then we had a short way down here for the ascending triangle's bottom, right? But that obviously didn't hit. We had the long of the parallel. We still haven't come back to back test the bottom end of that parallel. Nothing we can do about that. Then we had our long right here, which is the 2.236 break, okay? And back test, okay? So now, can you get that? You can get into this trade right now, okay? And what is that 2.236? Well, let me show you. Where is my Fibonacci? Bang. Okay, so you see this orange line right here. This is the 2.236. We've been using it as resistance for quite a while, okay? And we won't talk about this trade because that's going to be a trade that we already have set up that I have now moved and labeled correctly so that, you know, we can keep everything, you know, 9/10, 9/17 on the dates that we're actually calling them out. Then we obviously had the rising wedge breakout that we did not come back and back test that. And then we had the long from the value area low all the way down here. We did not get that either, okay? So none of our levels really got hit. We just kind of kept running on gold, but one of our levels is potentially getting hit now. So what is that? You know, we'll give you the trades for this week and we'll start low, okay? You can long the value area low, okay? That's right down here. It's this orange line. It's right around 34.45, okay? Or 34.30 to, no, I believe it's 34.45 right here. Sorry about that. I had that off just a little bit. Yeah, about 34.45-ish. Yep. Then we also, I would be running this up to potentially the point of control and the 200 moving average. But if we lose this level, I mean, this is short city right here for all intents and purposes. Then we have a secondary entry right here. If you come down and test this parallel, all right, this is a very long standing parallel. We have traded in this since, I believe, last year. We've been inside of this parallel for almost a year. We've deviated outside of it twice, once to the upside, once to the downside. Now we're back inside of it. We're riding the midpoint of it, okay? So you can long here and then take it all the way up here to potentially the value area high and even further all the way up here, right, to the top end of the trend channel. But obviously, I would be shooting more for the value area high around $3,704. That would be an all-time high as well, okay? So secondarily, you can long right here, okay? And what is that? That is the rising wedge's top and the 200 moving average, which will be, sorry, that's not the 200 moving average. Bang, get this out of here. That's the rising wedge top, okay? So where's my rising wedge? Bang. So the top of this rising wedge is right here, this red line. If you come down, you test it, you bounce, you can long there, okay? Secondarily, we do have the long at the point of control and the 200 moving average. I think I had I think I had that doubled. So long POC and 200 moving average bounce. So this is what is called a value area. Value area high, point of control is the yellow line, value area low is all the way down here. We come down here, we test this. We can run this back up to all-time highs. I mean, this is a heck of a risk to reward. So 4.5x risk to reward, okay? Now, we are getting that entry that we were talking about last week, where we break above the 2.236, and if we blast off, that's, you know, we're running this thing up to, you know, hopefully 37.80. Okay, so that would be an insane trade. I believe that, let me see, give me 1 second. That is a, 4.5x risk to reward, insane trade, okay? Now, we can also short if we get outside of this, and we're taking this from, we'll take the shorts from the top, okay? If you reject off of this value area high again, you can short, okay? Then, if you lose the 2.236, the point of control, and the 200 moving average all at the same time, that's like a perfect storm. You would want to be shorting all the way down to potentially the bottom end of the trend channel, at the very least the top of the rising wedge pattern that we have broken out of, okay? Secondarily, here's your really good short, right? When you get down here, this is kind of your confirmatory signal to say, hey, I'm shorting here, okay? Now, secondarily, you have your parallel all the way down at the bottom. So if you get all the way down here and you lose this and then you back test it bearishly, you are shorting, and you're shorting down to the value area low near right around 34.45 all the way down to even 34.11, which is the bottom end of the rising wedge pattern. So now that we have all of our trades on gold, let's get into what is called the silver snapshot, and let's see what we killed it on last week. This is a pretty critical moment for silver. And just one really quick, thing about gold. We would like to stay above this 200 moving average, 36.38. It's going to be a pretty key level. And we'll talk about the macroeconomic and the Fed forces that could, push us there or push us under it. Okay. So silver got a nice pullback. Okay. Right back to our 1.5 fib line, right? Which is something that we were talking about last week. That's a trade that we were talking about last week. All right. And we'll get into that in just a second. We took 2 massively profitable trades last week. All right. And so congratulations to anybody that got those trades. You absolutely killed it. Okay. So let's show you the trades that we had for last week. Obviously, we had this short, which was supposed to be an SFP and a bearish divergence at the highs. We never got that. Obviously, we never got the bearish divergence. We never got the SFP. Nothing we could do about that. Then secondarily, we had the longing of the value area low, okay, of this macro or micro range, okay? We never even came close to it. Unfortunately, I mean, you could have longed right here at the 200 moving average and the point of control. And guess what? Look at that. It's the trade that we gave out. 200 moving average, point of control, long that, run it up, 2 new highs, right? No swing failure pattern. You could have stayed in this and kept riding it because guess what? The next trade that we had given out was, hey, you long the ascending triangle and the back test of the 1.5 fib, okay? So if you stayed in this trade right here, you became wildly profitable. Obviously, I took the profits here because I said, look, if we come back and back test this 1.5, I can just buy the entire position back for, a better price and then just bang, ride it all the way up. And that's exactly what we did, right? We just bought the position back once we got outside of the ascending triangle, which let me show you what the ascending triangle was right here. Bang. You can see it right there. Boom. We came back. We back tested it perfectly. We called this out last week. We were trying to run it all the way up to the 1.618 fib, which was, at $43. That's exactly what we did. We front ran it by the exact level. We front ran it by 13 cents, but we did hit our $43 level. And then we kind of topped out. And then we got back under the value area high and then took profit right here once we back tested the value area high and then bang, lost it, right? So, I mean, for all intents and purposes, really, really good trade. We never got this short, okay? So we got 2 for 2 last week, but we never got this short. We never got this short, which was the loss of the 200 moving average, the point of control, and the ascending triangle's bottom. We never got that either, right? And then obviously we never got the short of the point of control. I wish I would have been talking about this value area high here so that I could have given you this short trade. But, I can't predict everything that's going to happen over the next week. I wish I could. I try to. I try my best, and I'll do my best from here on out. But, let's talk about what we can do this week. Well, first and foremost, we can short if we lose this point of control. Okay, this is a really, really key critical level that is in this micro range. If we lose this, this is bad news for silver. All right, and I would be taking that down to this prior consolidation zone in this 14-year high right here, right around $39.08. Okay. Now, you can also short the value area highs loss on the 200 moving average. Sorry, not the 200 moving average. That is my fault, not the value area high loss. It is the loss of 200 moving average. And bang. Okay. So if we lose this 200 moving average and we bearishly backtest it, which we are not doing, okay, we are not doing that as it sits right now. Okay, we're regaining it, and this is a key level right here, okay? We can short there and write it down to the point of control, see what happens there, and then ultimately down to the value area low around $40.13, okay? Secondarily, if we get an SFP up here, a swing failure pattern, you can short at this high near $43, okay? You would like to see a swing failure pattern and a bearish divergence up there, okay? So similar to the trade that we gave out last week that did not hit. But not having the bearish divergence was what kept us out of a losing trade, okay? So these nuances matter. Now, secondarily, if you look at this SFP trade, you can also start entering right here. This is kind of just a range, right? 42.70 up to about 43.13 is a shortable opportunity. You have not only the SFP right here, but you have the value area high and you have the 1.618 trend-based Fibonacci, okay? And that is a key level. So if you reject there, you can absolutely short, okay? So now, Where can you also short, or where can you also long? Well, you can long this support line. This is a very long-standing support line, okay? Look how long this goes back to. I mean, absolutely insane, all the way back to April. So you would just, for all intents and purposes, if silver stays above 39 bucks, the road to 50 is pretty clear, right? So that's kind of, your first trade, right? Your second trade. Long that point of control, baby. Long that point of control, okay? And if you long that point of control, you're looking to run it up to at least the 200 moving average if you lose the 200 moving average, which as it sits right now, we have not, right? We've regained it. We lost it for a second, but we've regained it. And then ultimately, you want to take it up to the value area high for about a 12x risk to reward ratio trade, right? Now, let's go ahead and put that up there. Boom. Obviously, trades are managed. Watch your moving averages. Watch your key levels in the interim on the way there. Now, this is the trade that we can get into right now. You backtest this 1.5, and I realize we already did this. I'm saying if you do this again, right, you can be in this trade similar to how we were talking about just a few minutes ago, right? So the 1.5 fib is a very key level at about $41.22. Then we have the ascending triangle, right? So if we come back, we've now back tested the ascending triangle, right? We've now back tested it perfectly. If we bounce, we're trying to run this up to about 43 bucks. Same exact trade as last week. Same exact trade as last week that made us, 2.68%. Okay. Now, what's the next one? Well, we have the bounce from the 200 moving average. Okay. But now that we have regained the 200 moving average, right? Sorry, give me 1 second. All right, excuse me. Bang. If we get up above this and we bounce, we can start bringing this up to the value area high around $42.66 and ultimately $43 for a new 14-year high. Now, the last trade that I'm seeing, okay, long that consolidation zone once you get up there, but I don't like this one as much anymore. I like this one. Longing above the value area high. You get above the value area high, say you reject here, you come back, you bullishly back test this, you are looking to take this to new highs around $43.50, entering at about $42.67. So let's say, boom. Give me 1 second. Let me just long value area high bounce. Boom. And that is what I am seeing inside of the markets right now. You have all the shorts, you have all the longs, you have all of the key levels, and you have all the trades. Going into this week, we have a big day today, okay? We have the FOMC meeting coming up and the Fed interest rate decision. So seriously, be on your toes. Be ready for some volatility. Be ready to see what's going to happen because, we'll talk about it here in just a second. So let's get into what is called the commodity compass. And this is what is driving gold, silver, the dollar, equities, crypto, the Forex, everything right now, right? So the Fed rate cut is expected today, and it is 25 basis points. That's what everybody is expecting. Now, the one thing I want to make sure everybody realizes, there is no guarantee of this. There is a high probability. They have hinted at it. But as we know, we have seen the Fed do whatever the Fed wants to do. So if they want to cut, they will. If they don't want to cut, they won't. Now, the two things I will say, it seems like that 25 basis point cut is priced in. Okay, that's why you see gold at all-time highs. That's why you see silver at 14-year highs. $43, right? On silver. You've got, $3,700 on gold. I think it was like $3,703, right? So if we get that 25 basis point cut, you might not see gold pump a bunch. What's really going to make gold and silver go up and the markets react is their mannerisms. The way that they deliver this information, their forward-thinking strategy, right? Like, are we going to continue cutting rates 2-3 more times by the end of the year? That's what's actually going to move gold, okay? I think everybody expects 25 basis point, cut. Now, the second thing I will say, if we don't get the cut, it's going down. It's going down. The markets are going to get crazy if we don't get the cut. And one more other thing, third thing, sorry. If we get a 50 basis point cut, a surprise cut, right? Gold and silver are probably going to moon. they're going to fly. Okay. Now, the second thing that's going to be moving the markets, the labor market and inflation. This is actually supporting a view for a lower rate in September today. Okay. 2 p.m. Eastern time, United States. Be paying attention. Jerome Powell speaking. Okay. We have weaker labor market. We have we have softer inflation. PPI is down, right? Unemployment is up though. And this is kind of supporting that view. All right. We are in kind of like a stagflation time. Now, core PPI and core CPI both rose. Okay. Signaling continued inflation. Then we have the Empire State Manufacturing. That dropped by 20 points. That was nuts. That just happened, I believe, yesterday. Retail sales did beat forecast by 0.2% and came in at 0.6%, beating forecast by 0.4%. So tripling what was expected because they expected 0.2%. Now, I want to get into what is called the Daily Golden Nugget because we are going to talk about all that other stuff here in the two special segments to come, the macroeconomic forces and the Fed, okay? The Daily Golden Nugget, or in this, case, the weekly Golden Nugget. Sorry, I used to do the Daily Golden Nugget in Advanced Traders Insights, so it's like ingrained in my brain. So if I say the Daily Golden Nugget, just know that I mean the weekly ones. So what I want to discuss is a concept that I teach, okay, with my strategy, with my methodology, with my win rate, and that is that your stop loss determines your position size, your leverage, and your entire trade. This is Risk Management 101. It is something that we teach inside of the Golden Opportunity. I have an entire section on risk management. And this is kind of something that kind of a little bit grinds my gears that people always say. They're like, everybody, what everybody always says. Only risk 1 to 2% of your account. Okay, well, what does that mean, right? Because a lot of people don't know what that means. And to a pro trader, that means something inherently different than the viewer that's a beginner or somebody that's not a pro trader that's hearing that, right? When you hear that, not you particularly, but when they say this to people, right? People think, oh, well, I should only put 1% of my portfolio on the trade. No, that is not what it means. So I'm going to explain what it means. It means that you're only risking 1 to 2% of your portfolio, and your stop loss, the level where you know that your trade thesis is incorrect and you need to be out of your trade. That is what will determine how big of a position that you take. Okay, so this is a common misconception that a lot of people think 1 to 2%. Oh, if I have a $10,000 portfolio, I should only put $100 or $200 on this position. Incorrect. If you want to do it like that, that's perfectly fine. I'm not saying that that's wrong. Okay, that's a great methodology to have. It's very safe. But for all intents and purposes, I'm going to explain what that means. Okay, now let's say you have $10,000 in a trading account and you're willing to risk 2% per trade. Okay. That means that you're willing to risk $200 max. That's how much money you're willing to lose on the trade. That's what risk is, right? Now, imagine you're trading an asset that's $100, okay? And you have identified a critical level that is just below that if it's broken, it proves that your trade thesis is wrong to go long, right? Hey, I'm going to long at $100 and say that level's $99.50, right? Your stop loss is at $99.50. It goes down there. You don't want to be in your trade, right? This is 50 cents downside per share. Because your max loss is $200, because that is 2% of the $10,000 you have inside of your account, right? That means you could buy 400 shares. And here's why. Because 50 cent drawdown per share times 400 shares is your $200 max risk on your $10,000 account. Right? So if you lose this trade, you would lose $200, 2%. So buying 400 shares of a $100 asset would actually be $40,000 though, right? It's not $10,000. That means that with your $10,000 in capital, you would actually have 4x leverage or, 3x margin on top of what you've already got in it, which is $10,000. So if the trade moves just 2% in your favor, from $100 to $102, you would actually capture an 8% move gain on your account because you would make $2 per share times the 400 shares that you just bought because you only have a 50 cent downside per share, $200 or $200 risk on your trade. That $2 times your 400 shares is $800 profit. On your $10,000 account, that is an 8% gain on trade. That is called context. and the power of proper position sizing and calculation. That is the power of strategy, okay? And responsible margin and leverage. You're not guessing, you're not, you're using math and precision, okay, to turn small calculated moves into meaningful returns and gains on account. And this is why this is, exactly what most people don't take into account when they see percentage moves on, people's wins, okay? So let's kind of, now that we've done like kind of a little master class on that. So this is kind of the strategy, that fact and strategy is what kind of affords me the ability to get exponential gains over time. If you go and look at my win rate, it's like 179% in like 10 months or something like that. 86% win rate, 179% moves on account. That's with no leverage. What if you did 4x leverage on that, like in this example, because you identified, your stop loss amount? The gains are exponentially greater. Okay, so let's talk about special segment number 1, the central bank watch. Not only do we need to watch what the FOMC is doing today, you have to watch the other worldly factors. And we've already talked about what could happen in 3 different scenarios with the FOMC. The ECB, their rates are on hold, which is the European Central Bank. They are at a 2% rate and they're adopting a wait and see approach. Okay, the Bank of Canada is holding steady at 2.75%. No new changes expected near term. Okay, and then obviously we have Poland, China, Kazakhstan, Turkey, Czech Republic. They're all actively adding to their gold reserves, and China actually resumed gold purchases for the 10th straight month, signaling strategic reserve build up. Okay, now reserve, our gold buying trends, right? We're seeing record demand, okay, because central banks made up 20% just last year. Imagine what it is this year, right? Of global demand for gold. That's pretty crazy. In Q1 of this year, 244 metric tons added. That puts them on pace to add almost another 1,000 tons this year, global central banks, okay? And this is well above the long-term averages. Now in Q2, it was 166.5 tons, and that was down 21% year on year. But year to date, they've added over 415 tons. And last year, this time, they had added about 525. So 95% of surveyed central bankers, they plan to keep buying gold in the next 12 months, okay? And anywhere from 1 to 5 years. Now, why does this matter? Because real yields are falling, okay? Inflation and geopolitical tensions are rising, okay? And then we have diversification away from the US dollar. Many countries are trying to reduce the dollar dependency by shifting reserves into gold and other, non-USD assets. And if you notice, now the gold reserves are outshining the treasury reserves with the, central banks, okay? So what is the last segment before we get into the economic calendar? Monetary moves. This is our last special report, okay? Now, CPI, it came in. Month over month, it rose 0.4%, seasonally adjusted, okay? Core CPI also rose 0.3%, same as July, all right? Now, year over year, it's up 2.9%, and, it's not necessarily awesome. Now, what happened with PPI, right? Month over month, it fell by 0.1%. But the final demand on goods was up 0.1% and final demand on services was up 0.2%. Now, core PPI rose 0.3%. This is the one you need to watch for. Core PPI and core CPI, okay? This marks several months of just steady increases in this measure, okay? This is not what you want to see. And a lot of times you will see PPI starting to slow and CPI will still continue going up because when PPI starts going up, it takes months and months. That's the producer price index. It takes months and months for that to trickle down to consumers because of the supply chain, right? Now, Michigan's consumer sentiment, all right? It fell to 55.4 from 58.2 in August. Expectations were around 58. So it was almost 3 basis points, 3 full points below what the expectations were. Now, inflation expectations for a year ahead from now, 4.8% and 3.9% to 5 years from now. And that actually went up from what it was previously, which those expectations were 3.5%. So that's not what you want to see. Now, the Empire State Manufacturer, this is where it gets really nasty. It dropped to negative 8.7 from positive readings in the prior months, okay? This is a 20-point drop. This is not what you want to see in the manufacturing sector. But the one glimmer of hope, retail sales actually went up. It rose 0.6 month over month. But remember, again, what I said about, CPI and PPI and, consumers being a lagging indicator, right? So we will see if that continues to rise. Now, core sales went up 0.7% as well. And year over year, total retail and food services sales are up 5%, okay? Now, inflation and CPI and PPI, it's sticky, okay? CPI is accelerating, core inflation is staying elevated, all right? And PPI showed mixed signals, but persistent upward pressure in core goods and services. This suggests prices aren't going to, be fading very fast, okay? Consumer sentiment is declining. This is, from the surveys. People see more risk. They expect worse conditions ahead, more inflation, worse jobs data, things of that sort. Manufacturing seems to be cooling more sharply than it should be, all right? And obviously, we do have resilient consumer spending, but is that due to inflation? We will see. Now, let's talk about the economic calendar, and we will sign off of here and get you back to your day so that you can pay attention for what's about to happen at the FOMC meeting. Now, today, you know what's happening. FOMC meeting, 2 p.m. Eastern. I got to say it again. I have to beat that one into the ground, okay? Then we also have the state job openings and turnover data for July. Then on Friday, we have the state unemployment, and this is going to be for August, okay? So this is more labor market data, and it shows trends post-summer, okay? Then for the following week, okay, next week, on Monday, Chicago Fed National Activity Index. Do you have to pay that much attention to it? I mean, it's a gauge of the overall U.S. economy, so I would. Then we have Musalem. He is speaking, Fed speaker, okay? This is at 3:30 p.m. on Monday, okay? And he is the CEO of the St. Louis Fed. He has cautioned that while inflation must be brought down, easing monetary policy or cutting rates, right, shouldn't happen too early. So pay attention to what this guy's going to say on Monday. Then we have, let's see, the 3 and 6 month Treasury bill auctions that happen at 3:30 p.m. on Monday as well. Flash U.S. Services PMI and Composite PMI is at 9:45 on Tuesday. Pay attention for this. This is the Purchasing Managers Index. This moves markets, okay? Then at 10 a.m., Richmond Fed Manufacturing Index, another manufacturing index. See if that comes in line with the New York State one. And then the current account balances for the balance of payments in the U.S. All right, that's midday or, sometime in the afternoon. That's on Tuesday. Then on Wednesday, before you see me again, 10 a.m., new home sales. Then we have the Philadelphia Fed non-manufacturing survey, okay, and the corporate bond market distress index that will be happening next Wednesday. So for all intents and purposes, we got a big week coming. We got a big day coming today. Hopefully I see you in the Golden Nugget next week at 11:30 Eastern Standard Time. Hopefully I see you inside of the Golden Opportunity where you can come and study and see how I have this 86% win rate, how I'm picking out these trades every single week, 100% win rates on the Golden Nugget. We're having a good time. Everybody's making money. And with that being said, I will see you all soon. I appreciate you so much for showing up. Thank you for supporting all of our social channels. And with that being said, everybody have a wonderful day.
Hey guys, Lawton here with Verified Investing, back with another video from Kinesis. Thank you so much to Kinesis for sponsoring this video. So going onto the homepage, you can see that I'm logged in to Kinesis.money, and I want to highlight something I really think is cool. You guys know that I'm a trader, a pro trader here at Verified Investing. And did you know Kinesis gives you another way to trade? That's right. You're able to directly trade on the Kinesis platform and earn physical gold and silver while doing so. You can see here their trading platform and their charting platform is actually integrated with TradingView. That means the same charts that I'm used to using, that Gareth is used to using, that all of us here at Verified Investing are totally accessible for you to use. So there's a seamless transition if you want to chart on here. You can even see the order books and the history, right? So if I want to put in a trade, I can put in the price in USD or the amount in KAU as one of their pairings. I can set a limit order, stop limit, trailing stop, whatever I want here. and I can do good till cancel or fill or kill or whatever else I need. Additionally, I can see all of my orders down here. Going on the left side, I can see all the different pairings that Kinesis has on their exchange, such as Bitcoin and Ethereum. Really, really cool. So not only is it a platform that lets you earn money and earn physical gold for doing anything, if you're trading cryptocurrency anyways, Kinesis could be an option for you as well. Kinesis is really cool, and there's way too much just to talk about in one video. But if you want to learn more about Kinesis, go ahead and check them out in the link in the description. Thank you so much to Kinesis for sponsoring this video, and see you guys next time.